Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to work our way through the dollar, yields, precious metals, and commodities and ETFs that I follow. I'm going to interject a whole bunch of my opinions as we go. If you need any help with anything, definitely check out finding-value.com. It's in the corner there. Check it out. Use the word discount and the coupon code if you'd like to join our community. We do have a question and answer session at 5 p.m. Sunday, Mountain Standard Time. So let's dive in here. Let's see what's going on with the charts. We've got the DXY that we're going through first. So we're down a little bit today, but it does look like we could potentially bounce higher with this hammer candlestick. Hammer candlesticks are generally reversal stand-up candlesticks that could go higher. We're also seeing strength in yields. Stronger yields, generally stronger DXY, as DXY is basically measuring the monetary tightness of one currency against another. So looking at the monetary tightness, we've got the 2-year going higher. I know I said that I thought yields are going to go higher because the overall market, the real estate market, is going to demand higher yields. We cannot lower yields. Why can't we lower the yields? Because you're going to cause a housing boom. I know inflation's slowing down. I know that seems counterintuitive, but I think that yields are going to remain resilient. It doesn't mean that they are going to go straight lining higher. I just think that they're going to be higher for longer, just like Paul has said. The 10-year yield also looking like it wants to break to the upside, higher yields, and the 30-year yield looks like it wants to break to the upside. So yields, to me, look like they want to go higher across the board. Generally speaking, higher yields equates to stronger dollar. And higher yields generally put downward pressure on gold, silver, and platinum, the precious metals. We could still be earlier than what I even think in this bull market. Yield sense, so inflation comes, yields go higher, and yields are going to go up either from inflation or from a bond market problem. But those are all both interconnected. You're going to have an inflation problem with a yield problem or a deficit problem, put it that way. So they're all interconnected. So the TYX-TNX ratio, the curve is inverting further. This curve is continuing to go downward, which means that the curve is inverting. When the curve inverts, precious metals do not like that. Oil doesn't mind it. Generally, oil does well when this curve inverts. It doesn't do as well when this comes back up that way. That's the precious metals time frame. Precious metals, oil. So we're still heading lower I should say, we're still inverting the yield curve, causing this to fall to the downside. Bond prices down 1%. They do look pretty, I don't know, they don't look horrible, but they don't look great. Definitely they don't look great, but I've been trying to figure out where exactly yields are going to go. If yields go higher and bonds go lower, I think that's a good case for a lot of these commodities that we watch. Fertilizer companies, oil companies, precious metals might be delayed some. Then later on, precious metals are going to have a huge run at some point. And just because this yield curve is inverting, it does not mean that precious metals can't go higher. It's just most of the time that I've seen in history, in recent history at least, gold does well when the yield curve uninverts. But that could be, the 40 years looking backwards, it might be different. And we enter a time frame where it's more like the 1970s or before that, but gold wasn't freely traded, so that's why I'm using the 70s. Gold down about 15 bucks. We're still above the big support levels. Everything still looks okay. It's holding together quite well. Silver down a little bit, 1.6%, still above its support level, still holding together. Again, it doesn't like the increasing yields and the inverting yield curve. So we could get one last blowout crash. We could get like a blowout washout move type movement, possibly. And then platinum also pulling back just like silver. again, doesn't like the market conditions. Looking at XAU to gold ratio, the gold and silver mining companies did outperform gold itself, so they went down less, so to speak. But we still haven't broken out of this big, important downtrend line that we're trying to break out of. The CRB index is higher. We definitely had strength in the oil and natural gas, and we're also seeing strength in yields to the upside. Are we going to move to the upside? I don't know in the short term here, guys. We've been bouncing back and forth, all through here. It's this indecisiveness. And if we do get increasing yields, I do think commodities could outperform for a period of time. CRB to S&P 500, commodities outperforming today slightly. And again, we are in this gigantic pullback in this ratio. Eventually, I think commodities will outperform stocks at some point when this does turn. We're still early, and it hasn't turned yet. Wave 1 is this move here. Wave 2 is the pullback, and then we get wave 3, which will come whenever it decides to come. GDX down a little bit. Again, higher yields, this still could fall further. That is definitely in the cards. We've got a little bit of a bearish engulfing, so I do think we could pull back further. Same with GDXJ, pulling back further, and SILJ could pull back further. Why do I think that? Increasing yields, inverted yield curve. And that is what's going on here in the short term. If we saw the curve uninvert, then, and we were going to get some recession and all that stuff, then we would see gold, I think gold and silver and all these mining companies start heading higher. At least that's my take on it. Crude oil up 3%. We're right at that bounce point. You can see we've got all these wicks at the bottom here. We've got support underneath us, and we're bouncing off that support. We'll see where we go. We'll see what the inventory numbers do. We'll see where we'll go. I'm just taking a wait-and-see approach here. Natural gas also heading higher. This does look like we could potentially work our way up at some point as we've got a large selling move. We're putting in a base, and eventually from that base, we will work our way higher. So I kind of like the natural gas companies down at this location down here. That's me. XOP, yeah, you know me, heading a little bit lower, but still up 1%. I should say the momentum's heading lower, but we're still up 1%. We're still above this breakout. So I still think we could potentially head higher if crude oil wants to head on up. So XOP is looking good. OIH is also looking good. We've broken this downtrend. I do think we could work our way higher over time. And it is highly dependent on what oil and natural gas do. Sprott Physical Uranium Trust, I know we got up to that 1815 level. This is our big resistance level. We hit our head on it. It doesn't mean we'll be successful the first time we come up here. It looks like it might take a couple of efforts of banging our head on this resistance level. We do have a bloody nose. That is generally a continuation pattern to the upside. We encountered some resistance at that 1815 level as expected. And we could see some pullbacks in the stocks, do a little bit of a return move. It's even possible that we do a little bit of a return move here. I'm not saying that's what I think it's going to do. I'm just saying it's possible. But the 1815 level is what we want to break through. And that's where we're at. We're right at that resistance level. We're knocking on its door. We want to break through it. URNM did a little bit of a reversal today. You can see that we gapped up and kind of sold off throughout the day. Momentum is heading down. You could consider this a bloody nose. Bloody noses are generally continuation patterns to the upside, or maybe we get a small little down day next to it. Whatever it is, we've broken out, and now we're heading towards the $38 level. That's what we want to break next. URNJ doing the same thing. We gapped up today, but the momentum is heading back down. We're probably going to come back, maybe do a little retest or something. We'll see. I'm not playing these short-term moves. I'm just riding this. I did get some really good buying opportunities in this area. I think it was in that area there. And I'm going to ride it higher. I'm good. TAN up 1%, a little bit of selling pressure. There's a little wick at the top there. But again, I don't think this looks too bad. I think we could potentially work our way on up, especially with the overall markets and the way they're moving. Copper really crushing it today. I think there was some news released from China, maybe doing some stimulus or something like that. But up today, a little bit of a wick at the top, but still looks all right. Tough to kind of see where this thing's going. It looks like it's just going sideways for the most part. Like to see some trend lines being broken, but it just looks like we're going sideways here. Lithium breaking to the upside. That looks fantastic for a move higher. I would be looking at lithium here in the short term. Yes, we can come up, pull back, and do all that, but we've broken out. That's the important thing. We've broken out of this pattern. I'd be looking for upside in lithium. Rare earth metals also breaking to the upside. I would be looking for upside in rare earths over the next month or so. Yes, we could pull back a little bit, do a little return move, retest move, whatever it is, but it's broken out. It looks good. I would be looking at it, or companies that are related to rare earths. S&P 500 still looking solid, moving to the upside. Again, double top perhaps. We'll find out. NASDAQ also moving higher. A little bit more. We could see a little bit of reversal here. That does look like the momentum is starting to slow. But again, momentum from before is up. Today, it just momentum slow because it went sideways. But again, still looks good, and we'll see where this thing peaks out at. I don't think that this is going to make all-time highs and just rip it. I think it's going to turn at some point here and go back and roll over, especially if we've got those interest rates going up like they are. Emerging markets, we've got a little bit weaker dollar today. Emerging markets likes the weaker dollar, so it was up a little bit. I think emerging markets look good, and a lot of the companies in emerging markets look pretty solid. Home builders continue their rapid pace to the upside. Nice, good momentum. Looks good, looks solid. I think we're going to go higher in home builders for a little while. MOO also looking strong, looking like it wants to go on up and continue to go higher. This is the agribusiness ETF. This is fertilizers and some of that stuff. Looks good. Copper up 2%, right on that resistance line. We'll see if we can break through this resistance area right where we're at. But we're right on top of it. Iron ore, just still basing sideways. I still think we are going to work our way higher. We've broken out of this downtrend. Breakout, higher low, and then we got to break this to get in a new uptrend at 130. So we want to break 130. Nickel down a little bit, but right on support. Still holding in there. We've got aluminum up a little bit, up 0.42%. Again, I think we're going to base out here and work our way higher eventually. Baltic Dry Index moving sideways. I still think it looks pretty good. It's trying to put in some sort of base out here and work our way on up. Newcastle Coal still needs to base out. Let it base out. Give it some time. We're at above support. That's where we're at. And then we've got Ethereum up 0.31%. Moving sideways, with Bitcoin also moving sideways. And I do think we are on top of support, and we'll see if that support holds. And I think eventually we'll work our way on higher, especially if liquidity comes into the system. So that's what we've got for today. I think, uranium, it gapped up, and we did have momentum come back down. Look for moves in uranium to kind of retest their breakouts. That's what I would expect. But again, I don't play the short term here, guys. I'm a long-term player. The reason I do these daily technical analysis updates is I know a lot of you guys enjoy it. So that's why I'll continue to do them. I do use short-term technical analysis to try to time my buys as best I can. My main thing that I use is ratios. If ratios are saying that some asset is very cheap, I go into the cheap assets and I use technical analysis to try to time my buys as best you can. No one's perfect. No one's going to nail the exact bottom. Just kind of works that way. That's why I always have the valuation at my back. Valuation and the market condition tailwinds at my back, pushing me forward. That's what I want. So if I mistime something, I can hedge myself with time and my valuation is good. Then it's all good. And especially if it's on a very big picture view, like a big chart, we're very, very low and we're basing out and we're about to come on up. Those are some of my favorite times to purchase. So that's what I've got for today, guys. Give me a thumb up, subscribe to the channel, subscribe to the website. Love to see you guys part of the community, and we'll catch you next time. This is Finding Value.